Yeah, first of all, good morning to London. Thanks very much for having me. First of all, I agree with you. The revenue number is one thing for us. Very importantly is that from the profit line, EBITDA line, we got out of the gate. We got a strong finish in 22. So Q4 was fantastic for us. Very importantly, to your point on pricing, price over cost, as we call it. So pricing stronger than cost inflation was very positive in Q4. So that gives us a lot of tailwind going into 2023. And then obviously the outlook for 23, we actually positive. We continue to grow our revenues on the back of strong pricing. And yes, it's early in the year. We are a little bit cautious yet on the RCO development or the profit development, but let's wait and see. I think we are positive for 23.
Just to talk to that demand story for a moment here, how much pent-up demand do you think there is? Have higher interest rates begun to bring about real slowing in private housing markets, in infrastructure projects? What are you seeing in current trading?
Yeah, I think the picture is not unanimous for the whole globe. I think when it comes to segments, it's clear interest rates are pushing down housing. I think there will be a decline in residential in Europe, in the US, in other parts of the world, back on the back of the interest rate hikes. That's clear from our perspective. But we are quite positive that this will be outweighed by industry, chip factories coming back from Asia to Europe and or the US. Battery factories, same thing. Data centers, so there is a lot of pent-up demand on that. And the same is true for infrastructure. We see the first money coming from the IRA in Inflation Reduction Act in the US. So we are quite hopeful for the US. We're actually seeing also some good demand in some parts of Europe. And we are very positive also for Asia, which has gone through 2 or 3 difficult years after COVID. But we see some signs of good hope in Asia.
Dominik, we were talking to Wienerberger yesterday, and Heimer Schisch was telling us that effectively some of this fiscal spending is not positive for the inflation story, that the substitutions you talk about, the infrastructure spending by government, has the potential to push up prices yet again. We've just come through a cycle. We can see that there's a pricing momentum still in some of the numbers. Is it a problem? Do you think that the fiscal spending should actually be pulled back at this stage?
No, I do not agree. Heimer Schisch is a great guy, but on that one, I have to disagree because the infrastructure is just outbalancing the sharp decline on residential. So I think overall, that we won't see much volume growth in 23. It's just a matter of shifting between the segments. That's why I don't think there will be an additional inflation coming from the material side. Labor shortage is probably the biggest challenge that we are facing in Europe and especially also in the US.
And that was a similar line on the labour side, at least in terms of wages. Just flesh that out for us. What sort of wage pressure are you facing in 2023, and how is that different to 2022, given that we've heard more about cutbacks, layoffs from more cautious companies at this stage?
Yeah, for the time being, we see still pressure on the labour side. I think shortage is there in the US, clearly, in parts of Europe as well. I've heard about the layoffs. Let's wait and see how this balances out. But we have to see there is a lower overall labor supply coming into the markets. So we have to see how this balances out over 2023. I continue to believe it's going to be challenging for this year.